Hey folks, this is Pat Walker from MissionWinners.com, and boy oh boy do we have some exciting news to dive into today. Buckle up, because we're about to take a roller coaster ride through the world of finance. Let's cut to the chase and talk about the big news of the day. Now, I gotta tell you, this is serious stuff. The Fed just voted to cut interest rates, and it's a pretty big deal. They lowered the target range for the federal funds rate by 0.5%, bringing it down to 4.75 to 5%. Now, you might be thinking, Pat, that doesn't sound like much, but let me tell you, in the world of finance, it's like dropping a pebble in a pond. Those ripples are going to spread far and wide. Here's something interesting. Not everyone at the Fed was on board with this decision. Fed Governor Bowman wanted a smaller cut of just 0.25%. It's like when you and your buddies can't agree on where to go for lunch. Sometimes you've got to compromise. Now, why did the Fed make this move? Well, they're feeling more confident that inflation is heading in the right direction, towards their goal of 2%. Hey, before we keep going, I've got a quick message for you. If you're finding this information helpful, and I know you are, don't forget to smash that subscribe button and give us a thumbs up. If you got questions, drop them in the comments below. We love hearing from you. All right, let's get back to the nitty-gritty. So the Fed also updated their crystal ball predictions for the economy. They think unemployment might tick up a bit this year, hitting 4.4%. But on the bright side, they expect inflation to cool down more than they previously thought. It's like predicting the weather. Sometimes you've got to adjust your forecast as new information comes in. Looking ahead, the Fed is hinting at more rate cuts this year and next. It's like they're planning a series of small steps rather than one giant leap. Fed Chair Powell had some interesting things to say about all this. He defended the bigger rate cut, calling it a recalibration. Powell wants to keep the job market and the economy in tip-top shape, and he thinks this move will help do that. Now, let's talk about how the stock market reacted to all this news. Holy smokes, it was like a roller coaster ride. At first, stocks shot up to new record highs. But by the end of the day, most sectors of the S&P 500 actually closed lower. It's a reminder that in the stock market, what goes up doesn't always stay up. That's why we always got to be on our toes, folks. The really interesting action was in the bond market. Usually, when interest rates go down, bond yields go down too. But today, something unusual happened. After an initial drop, bond yields actually went up. It's like when you expect it to rain, but the sun comes out instead. Some folks think this might be because investors are a bit worried about inflation in the future. I've got some exciting news for you. Next Wednesday, on September 25th, we'll be hosting a live public webinar on YouTube. Make sure you're subscribed so you don't miss it. We'll be diving deep into some of these financial topics and answering your questions live. Stay tuned for more information. You won't want to miss this. Okay, so looking at the bigger picture, the stock market is still having a pretty good year so far. The S&P 500 is up almost 18% since January, and other major indexes aren't far behind. That isn't shabby. Almost sweet potato pie time, folks. In other news, the housing market is showing some signs of life. More people are applying for mortgages, especially to refinance their homes. It's like a sale at your favorite store. When interest rates drop, people rush in to get a better deal. We also saw an increase in new home construction and building permits. This is good news for anyone looking to buy a new home. It's like farmers planting more crops. Eventually, it should lead to more houses on the market. That's all for now, folks. Remember, in the world of finance, things are always changing. We've got to stay focused, keep our eyes on the prize, and not let the noise distract us. It's not about day trading. It's about finding those clean and simple patterns and riding the trends. Before we go, I want to remind you that now is a great time to visit MissionWinners.com. We have several free lessons that include a quiz. So if you're interested in really digging into some great educational content, come visit us. I'll put the link in the top right corner of this video. Remember, investing isn't easy, but with the right tools and mindset, we can stack the deck in our favor. Until next time, this is Pat Walker saying keep your head screwed on straight, limit those losses, and let those winners run. Take care, and God bless.